Quasar Markets Live. You have been asking for him, and I brought him to Todd Horwitz, better known as Bubba on Wall Street. Bubba, this afternoon, I did something I haven't done in a while. I've been talking about it. I've been running my mouth about it. Now I did it. I sold half my portfolio in equities, and I sold about 15% of my crypto off this afternoon. What's going on? How are you? Talk to me, man.
What's up, Mr. Big Beat? How are you? It's great to be with you. It's funny that you mentioned that you sold half your portfolio. As you know, I never sell because I have a hedging program that hedges either a beta-weighted portfolio or each individual stock to itself. So I don't have to sell. When the markets go down, they accumulate. But it's interesting. This morning in my chat room, I wrote to all my members that, full disclosure, I'm buying puts now extra because I think that whether we get a temporary sell-off here or this is going to be the overall turn, I don't know which is which. But I certainly expect to see a pretty healthy sell-off in the next week or so. And we'll see where we go from there. Tops aren't made and are certainly not announced in the market.
That's right.
I watch the action and I see this stuff going on here and I see the stuff that's getting bought up and it doesn't make sense. Am I right? Well, I guess full disclosure, in the 90s, my partner and I were massively short and we had to make a decision. Do we want to stay in business or do we want to cover and continue? So we decided to cover and continue. But at the end of the day, we were right. And I'm seeing that same kind of action today.
Okay. All right. Because I began to feel like I was alone here saying the markets are frothy. I was on Schwab Network on Tuesday of last week. And Nicole Petalides, love her to death.
I love Nicole.
She nailed me down. She's like, okay, Big B, you've been saying this and here we are. What are you selling? And I said between 12 and 17%. I think that's the pullback. 10% is a healthy correction. 20% is a correction. Where are you? I'm
thinking deeper. Now, it may not be right away, but I'm thinking deeper, right. Steve. I have to look at the big picture. We've gone up. We have a lousy economy. I don't care what the economists say. The middle class is in trouble. Okay?
Yes.
The participation in the markets, if you look at volumes, we are at dramatically lower volumes than we've ever been at.
Why is the retail, why even some institutions, why are they not picking this up? Why are they not getting what we've been doing this for 35, 40 freaking years? Why is it different this time as the quote adage? Why is it different this time? What are they missing? What am I missing?
You're nailing it. You're not missing anything. You're nailing it. This is what always happens. Anybody who's trying to invest is strictly a buyer. They buy up every dip that comes in. And listen, they've been rewarded well. But we all remember in 2008, there was a lot of warning signs while the markets continued to go up. And then Paulson came out and faced the nation and said, the banking system is safe and sound. I don't think the banking system is so safe and sound. I'm starting to see problems in real estate. Now, let's also look at
what problems are you seeing in real estate? What problems?
Well, I mean, first of all, they're overbuilding. There's supply that they can't sell. Okay. You still got a lot of commitment to building. And everyone was banking on this rate cut that the Fed gave us a week ago, 10 days ago. All right. What has the 10-year note done since the Fed cut rates? They've gone up every day. Okay. So again, what people don't seem to understand is the federal funds rate has nothing to do with you and me, the individual. It's only for the banks that their borrowing rate.
That's what I'm saying. What are we missing? We understand the financial world. We understand, and we know the economy is not always connected to the stock market, almost pretty much never. What are we missing? I'm just like, I don't get it. Like, I'm trying to figure it out. And Todd, for me, when I don't understand something, something's not right. So explain to me what they're thinking, what the retail trader that's just buying every damn dip, or the institution who's not quite selling just yet. What is the disconnect? There's got to be a disconnect here.
Well, I do have what I think is an answer. I think the institutions are waiting to bury the public. Okay, that's what I think.
I agree.
Okay, and I think they're letting the public to push it higher. Okay, they're allowing them to come in. That's why the volumes are so light, because you don't have institutional players.
That's right.
Okay?
There's the volume's low. Right.
Every day you got 401k money comes in, pension fund money comes in, profit sharing money comes in, always to the buy side, which is why the markets have a predisposition to go higher.
Right.
So now I think when we get to a certain point, and we're very close, whether it's next week, next month, again, I can't time it, but all I can tell you
also broken. I get it. Yeah.
Is the warning signs look horrible. They look to me like they looked in 2008.
And what's the biggest warning sign for you? For me, the biggest warning sign was the sheer amount of margin that banks had out there for people to borrow to trade. They're pulling that back. That scares me. And yet there's still this morning, 7.9 trillion in money market. What's the biggest thing scaring you out right now in the markets?
Well, listen, you got no jobs, and jobs are being replaced. The people that are getting laid off in my age bracket, okay, they're not getting a job back. They're going to be replaced by AI. Okay, which AI may be the greatest thing ever, but it's going to do a lot of damage to a lot of people because it's going to displace a lot of jobs. You've already heard talk of potential universal basic income coming out. That's not good for the taxpayer because the taxpayers are the ones that fund it. Everybody thinks that government gives benefits. The government gives benefits because the taxpayers pay their taxes. Okay, so it's not. That's a big warning sign. The banks, I think, are over leveraged once again. That's another warning sign. The public, the average Joe on the street, he's over leveraged. He's borrowed up to his credit card eyeballs.
Yes.
So now what do you got? Where's the money going to come from? I don't understand. When you go to a restaurant, you pay $100 for a steak. Doesn't make sense to me. Again, but
Tulips.com, housing bubble,
South Sea bubble.
Exactly. When I hear
greed always drives markets when we're near a top, Steve. That's the bottom line. Is greed drives the market. The average investor thinks that they're going to get rich now. They're going to keep buying, and they're going to keep buying, and they're going to leverage. They're going to have too much margin. And what happens when you're over leveraged and the market goes against you? Not a pretty picture.
You get
kicked out. The panic and the fear.
Your game is over for a while. Is this market? I mean, as a student of history myself, and I know you are too. Is there a time in history like this?
Well, I mean, I can't ever remember a time this slow. I've never seen a September in 47 years as a trader. I've never come out of September with it being as slow as it is.
Yeah.
But there's a lot of changes that have come to markets. I mean, we've reduced a lot of the amount of stocks that are available now because of the ETFs.
Right.
There's not as many participation with the mutual funds because of the ETFs. So there's been a lot of consolidation of the investment dollar. Okay. It's even affected, the big trade for traders that were on the floor back in the day was the triple witching trade. Okay.
Right.
That no longer exists because they've made so many adjustments to take away volatility that they just allow markets to push up without any.
And yet we have zero DTEs, which I think are the bane of, or as Buffett would say, the weapons of mass destruction. Right. Okay. So we know that the economy is not well. We know that real estate is definitely not well, and you live in Vegas. Vegas is really hurting right now. We know that margins at banks are being pulled back. We know that the average person's credit card is way out of whack what they can afford. The number one Google thing yesterday was, how do I protect my mortgage? I have to ask, I mean, where is the money coming from that is now going into this market? We know that right now, 2 weeks ago, it was 7.2 trillion in margin in money market. It went to 7.7 trillion this week, and now at the end of this week, now it's now 7.9 trillion sitting in money market, doing nothing, at a bank that's pulling back margin. Who the hell is putting money into this market? Bubba?
Just strictly the funds, baby. Just the mutual fund, not mutual funds. I'm sorry, the 401k plans,
401k
pension funds. CalPERS, California Pension. Those guys have to buy. They're always on the buy side. They're always in the market. So that is what naturally drives markets higher. So if you took out them, you'd have zero volume right now.
But the buy side,
I think the institutional players are not playing right now.
Right. Explain to our users or people are watching what do you mean by the buy side and the sell side? Explain to them in a way that's easier.
Sure. I mean, the buy side, mutual funds, 401k plans, they're always buyers unless they're liquidating positions. They're never short sellers. So they're buyers. So they're always on the buy side. So every morning when you come into the markets open up, there's always buying orders in there. Whether or not we go higher or not, that's a different story because there could be sellers overwhelming the buyers. But everything being equal, if Monday morning the markets open up and just strictly the pension funds and the mutual funds and the IRAs and the 401ks are the investors, the market will be higher on Monday. Okay. Now, again, usually there's another side of that trade, which we have not seen for quite a while. We haven't seen the sell side come in. and the bigger banks and the traders, they trade both sides of the market. Now the markets have become so overbought. We are historically overbought. So I expect to see good.
Historically. All right. So let's talk about that. You mentioned CalPERS, and for those of you out there who don't know what CalPERS is, the California pension. Right. And not just CalPERS, you got TELPERS, and you've got New York Pension Fund, New York, you've got them all coming in. They've got to be scared out of their wits right now.
You know what? I think that they don't think about it. I think they just keep investing. You know, one thing we know about those managers who run CalPERS and who run the big pension funds, they're always in trouble. Why? Because they don't think about it, because they don't use any real common sense. They don't look and say the economy and say, geez, maybe we should pull back a little bit. But of course, the real problem is that they've borrowed so much of that money that they have to perform to service their own debt. You know, we have a big problem in this country in general with debt, right? From our government all the way down. And you have to service that debt. And when you're borrowing money off of your pension people, just like in Social Security, you better have some big returns, or otherwise you're going to have a problem. And that's what will eventually create the next meltdown, is because we have too many funds and firms that are over leveraged, borrowed too much money, lent out too much money. And of course, that will lead to the next collapse. And again, it'll come back, but it's happened. I mean, we've seen these historic times in 1987, 2001, and 2000.
This is 87. I'm saying that right now. This is 1987, where it was just like hopium. All right, let's do this real quick. I'll put you on hot seat. I don't do gotcha questions. You know them for me as long as I've known you. But I have to ask politically, what the hell is going on in Washington, D.C.?
Well, the swamp is the swamp. Listen, we have a political system in this country, and I don't care which side of the aisle you sit on. Right. They're all crooks. They don't take care of their constituents. They take care of themselves. Our whole system, every one of them, whether it be Schumer or O'Connell, and either side, pick one, they're getting paid off from somebody, okay, to get these bills passed. You've heard the sausage making deal that's been going on for years. This whole government shutdown, I'm happy for it, because you know what? I'm sick of it. I'm sick of them taking money that is undeserved, that we have to fund. Remember, government doesn't make money. Government makes debt. And we have to, at some point, rearrange and reorganize our system. Okay. But again, it's not going to happen in our lifetime.
The president says he's going to use this as a way to get rid of a lot of jobs and to lay people off permanently. He called this a blessing, the biggest blessing for the Democrat Party. Is he right about this?
I don't think he's right. I think they're in trouble, because I think there are going to be a lot of layoffs. And I think that Schumer's side, the Democratic Party, is going to suffer, I think, from all these layoffs, because these are going to be a lot of lost jobs. And if we just say that the country is 50-50, okay, the people that get laid off, they're not going to be happy, right? So, look, I think we have a mess, Steve, and unfortunate we can't get another candidate on the ballot. That's the real problem. We have two parties, which, it's like Coke versus Pepsi. Coke pushes Pepsi, Pepsi pushes Coke, and they both steal from all of us. Versus if we could get like an independent, a legitimate independent on all 50 states and all ballots, we'd have a legitimate chance to have a real choice.
Right. And we've now talked about real estate. We've now talked about the economy. We've talked about the banks. We've talked about, we can talk about energy. Oil now is $60 a barrel.
Gold, baby?
Right. You hit me in the nail there. Gold, silver, Bitcoin, Bitcoin almost made another all-time high here. All came close. I sold a lot of it there.
What a move it made today. What a reversal it made this morning. I think gold is, the central banks around the globe are buying gold. Telling me that should be setting off red lights.
That's exactly right. Exactly. Economists are going, wait a minute.
Okay. That means inflation's going higher. It means that the governments are worried about their own currency. It means the governments are worried about their own balance sheets, which means that there's more problems than you and I both know about. And we can recognize a lot of them. I think silver might hit 50 before the year's over.
I agree.
Which is an all-time new high.
So inflation's going up, and you and I talked about it, and I've said this live on TV. Stagflation, stagflation, stagflation. It's here. We're now living through it. Where people, for those of you who don't know out there, it's where job losses pick up, you're losing jobs, and inflation still goes up. We have a new person, Mira, now that works in the White House, works in the Fed. Seems corruptible to me, but okay. Next Fed meeting, do they cut or do they stay the same, or what do they do?
Well, I think they're obviously, depending on how long the government shutdown stays here, right? Because they want to base it off of jobs. The ADP jobs number, which is the private sector, was brutal. Okay. Jobs are not very good. Inflation is still going higher. Listen, cutting rates last time is a mistake. If they cut them again, it's a bigger mistake because it's going to send inflation through the roof. Okay. Right. Again, what they don't understand, and this is what I don't understand, these are highly educated people. Okay. But let the free markets tell you what interest rates should be. Because if you go to the free market interest rate, if you go to a peer-to-peer lender, or you go to any of these places, interest rates are at 9 or 10%. They're not at 4, they're not at 5, they're not at 6, and people are paying it. Let the free markets trade. This is what the Fed has done. They destroyed a lot of the free market system, and they're supposed to be a private organization. We know they're not. We know it's all BS with whoever's in the office.
President says that he's out to help the farmers. He destroyed the relationship with China, destroyed the relationship with Brazil. China is now buying soybeans from Brazil and other places, not buying a single soybean this year from the United States of America, the first time, and I guess since I was a child. President now wants to give him $10 billion to the Midwest farmers. That's socialism to me, my man. Talk to me. What's going on?
It's been that way forever, Steve. The giving back to the farmers. The farmer's never in trouble as long as he can walk to his mailbox. But at the end of the day, okay, I happen to agree with the tariffs, and with the reason that we're having a problem with China, and the reason we're not selling soybeans is because worldwide, Australia produces, Brazil produces, Argentina produces. Worldwide, there's an oversupply. So if we go back to simple economic class, supply demand, are you going to pay more for American soybeans? When, especially China, who doesn't care about their people anyways, are they going to pay for quality? They're going to pay the cheapest. When they need them, they're going to buy it from us at whatever price they need them. But we've seen this movie before. And again, when there's an oversupply and there's no weather issue, there's plenty out there. So if I'm going to go out and buy a soybean, I can pay $10 a bushel from the United States, or I can pay $9.50 a bushel from Brazil. Who am I going to buy from?
Yeah. All right. Last question. Over under. What's the chances that we go to a war with anybody?
Oh, I think that's a pretty high probability. I would say over.
Over. You see Taiwan loading up on drones, worried about China attacking. You see President now screaming about Hamas that get out before Monday, or I'm going to blow your place apart. He's hitting Venezuela. You're seeing obviously Ukraine and Russia still going. Ukraine says if Tomahawk missiles go in there, that's a problem. We've raised the level. Poland is now literally arming up for Armageddon. And NATO is getting nervous themselves. I just spoke to two NATO employees yesterday. You just said over under is over. The chances of us going to war with somebody is pretty high. Prolonged? We have no.
I hope not. I don't. The last few wars, other than Desert Storm, have lasted way too long.
Right.
Hopefully, we've learned our lesson from Iraq and Iran and from Vietnam and from Afghanistan, and we go in and do the job and get it over with. Right. But of course, one of the things you and I both know, and this is another problem with government, wars are very profitable.
You took the words out of my mouth.
So I got to bring that up, right? Because for defense contractors and for government contributions, war is good.
I think we lost you that last sentence there, Bubba. What was the last sentence you said?
Well, war is good, and the defense contractors, and they may not admit to it, but they like long wars because
Lockheed Martin, Raytheon, Kratos Defense, they're all happy right now.
They make a lot of money at war, which means the politicians get to fill their coffers while we're at war because they're not there fighting. They're not losing their life. They're sending a bunch of innocent people to go fight in a war that's profitable for them, not beneficial. But I hope, if the things that I think are going to happen, and again, listen, we're seeing so much distress in this country. Look at all the shootings here. If what I think is going to happen happens, I hope it's quick. I hope it's swift. I hope we don't screw around. We go in and do our job, take care of it, and get out.
Anything on your mind right now that you want to tell the people right now? Anything that you like right now that people are missing right now?
I think just be very careful here. I just think that there's not a real lot to do. I would not panic out of a portfolio that I was building as long as I wasn't over leveraged. But I would not. There's not a lot to do in here, I don't think, Steve. I think that you just have to be calm and patient. And some of the best trades are the ones you don't make while you're waiting. Look, if we're going to continue to go higher, you'll have an opportunity to get in again. And I think overall, it's just easier to wait, just like in gold and silver. they're going to come back at some point and give you a better opportunity to buy. I wouldn't chase them up here. That's just my views.
And I'm going to put it in right now. For those of you out there, please, for the love of God, I've known Bubba a long time. Click on him, BubbaTrading.com. Hit him up. He will tell you the truth. Do yourself a favor and learn the ways of protecting your portfolio. You saw Dr. Ellman earlier. You saw him, Bubba. We're all saying the same thing. Markets are a little frothy. Learn to protect your portfolio. Click on BubbaTrading.com. See Bubba. Bubba, we'll see you next week, my man.
Thanks, Big Beat. Appreciate it, brother.